Drip by drip, barrel by barrel, the oil just keeps on coming. Despite a deal by major producers to cut supply, OPEC exports hit a 2017 high of more than 26 million barrels per day last month.
The overall outcome that they planned for was for higher prices. When those prices are higher, and you've got countries whose balance sheet depends on oil revenues, they're going to inevitably cash in.
The current agreement, which runs until March, calls for a cut of 1.8 million barrels per day. OPEC and non-OPEC members are meeting in Abu Dhabi to discuss why certain countries aren't meeting their targets. High on the agenda is criticism by some producers about the data used to track compliance. The so-called secondary sources measure relies on a mix of government agencies, media and industry bodies.
There is always going to be a degree of, I would say, reverse engineering backwards, because these sources are coming from media agencies who are discussing with traders, with oil companies who are active in the market.
Some countries like Iraq and this one, the UAE, think the secondary sources aren't accurate and that they're being asked to cut more than they need to. They also think that the focus shouldn't be on production, but rather how much each nation is exporting, because that's more likely to have an impact on prices.
Saudi Arabia, which is currently chairing OPEC, says it's willing to discuss the possibility of moving to export targets. But the move wouldn't be without its problems.
That would probably help to reduce the buildup in inventories in the key export markets for a lot of OPEC producers. But then you'd have to wonder, okay, if the exports themselves are being limited, but production stays steady, there is oil that's still going to be building up somewhere.
Perhaps the biggest difficulty the production cut faces is from external producers, namely the United States. US shale drillers have proven responsive to any price increases, and with little sign of American firms slashing their activity, many analysts think oil may stay close to current levels throughout 2017.
I would say we're going to end up closing around the $50 a barrel mark. And I no longer see that prices are low, I just see that the price is the price.
Despite efforts to curb production, worries about oversupply are continuing to weigh on prices. And with OPEC's output growing, more may need to be done to rebalance markets. Nawied Jabarkhyl, TRT World, Dubai.
And Nawied Jabarkhyl joins us live from Dubai. Great to have you with us, Nawied. Tell us a little bit about the Saudi deal. That Saudi Arabia appears to be ready to cut supplies to Asia by about 10%. Tell us a little bit more about what's behind that.
Yeah, well, according to sources close to Saudi Aramco, the country will cut its exports to Asia by up to 10% next month. In total, that would mean that its global supplies will reduce by about 500,000 barrels per day. Now, that's slightly higher than what it's required to do as part of that output deal that we were just hearing about. But what the Saudis are trying to do with this move, essentially, is show a greater sense of leadership. They're aware that compliance has been falling in recent months as OPEC output hit a 2017 high last month. So this is very much symbolic. On the other hand, it's also important because so far Saudi Arabia has tried its best to limit the impact of its cuts on Asian buyers, because it knows that countries like China, Japan, Korea, South Korea and India are the ones which will drive global demand in the years to come. So this is a sign really by Saudi Arabia that it's ready to relinquish some of its market share, very much in the hope that it reduces concerns about the effectiveness of the output cuts.
Interesting possible slight change in strategy there. Let's talk about prices. Brent crude has been hovering around the $51, $52 range recently. What are analysts saying about where prices could go from here?
Well, the interesting thing is, after this meeting in Abu Dhabi, OPEC put out a statement saying that the talks were, quote, constructive and fruitful, but in actual fact, prices have responded negatively. They've fallen slightly to just about $52 a barrel. And that's because we know that oil prices are responsive. They move quickly when news headlines come out. But essentially what they haven't done in recent weeks and recent months is move much beyond $50 a barrel, either lower or higher. And what you hear when you speak to many analysts in this region is that oil prices are in some sort of range at the moment, between $45 and $55 a barrel. And that's where it's likely going to stay in the months left in 2017. partly because there's still too much supply, but demand is also relatively healthy. So the market fundamentals are holding prices steady. And then, of course, there's US production as well, which is having a downward pressure on prices.
Yeah, no, some reports saying that global demand, OPEC looking at global demand growing by around 1% a year over the next few months and years, but that's still to be seen. Let's talk about Iraq and the UAE now. They are pushing for their output to be measured in terms of exports rather than production. What's behind that?
Yeah, essentially it's because the export figures are more favourable for those two countries. If you look at Iraq, for example, its exports in the month of July were about 3.2 million barrels per day, which was slightly down compared to June. But when you look at the production figures, which is the measure used to gauge compliance, it shows that Baghdad's output was over 1 million barrels higher and that it actually missed its targets for the previous month. So the issue here seems to be one of accuracy, and essentially Iraq and the UAE saying that they're being asked to cut too much because they don't agree with the sources being used. But what it also highlights, I think, and this is important, is the inherent difficulties with multilateral action like this. Countries like Iraq and Malaysia obviously have different motivations, different circumstances to other producers like Saudi Arabia or Russia. So getting all of these nations to act in unison was always going to be a tough task.
Indeed. Nawied Jabarkhyl, we are running out of time. Thank you ever so much for your analysis.